Good morning everyone and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, we have a lot to digest today. A lot is happening in the global markets, in the crypto markets, and of course back home we have the earnings season in its full swing, Santo. And talking about earnings, Santo, one very debatable or highly controversial company also came out with its earnings yesterday, and that is Tata Motors. Always Tata Motors, whenever their numbers come out, it always gets a lot of opinion out there on social media as well as on many other platforms, of course. But what was your take, Santo? What did you take out from those numbers?
Well, CJ, this is something that we've been debating for the past many months now, and I continue to maintain my stand that unless you see a significant improvement in the company's bottom line, further stock outperformance looks very difficult. And if you look at the latest quarterly numbers, there is very little to be optimistic about, at least for the near term now. Things may change about 6 months down the line, but at least in the short term, if you look at it, the yet another quarter of disappointing numbers, that's again going to weigh on sentiment. Clearly, they are far behind whatever they are guided at this point in time. Now, the free cash flow guidance for this fiscal was about £1 billion. Now, they have said that it will just about be break even. The free cash flow will be just about breaking even. Debt on the books has also gone up to about 59,900 crore from about 48,700 crore at the end of FY22. And the domestic side of the business is doing well, but there too the company is grappling with higher raw material costs. So that's again a problem. Besides, all those chip shortages and other issues continue to be there. So while the India business still looks to be in a much better shape than what it was some time back, now it's the global business, that's the JLR side of the business, which is causing a lot of pain given the bleak outlook for both US, Europe as well as China.
Well, Santo, you said that there is, there is little hope, but I think there is no hope actually, but there is a little hope, and I think
you're the hopeful one always.
I think that hope, Santo, has come from the commentary that the management has given, and also the sort of performance that actually JLR has given the tough environment that the company was functioning in the second quarter. If you look at what Tata Motors have indicated in their conference call with investors, also in their press statement as well, post the earnings, they've indicated that the demand environment still has remained quite strong, and you can see that in the revenue performance of JLR, where their revenue line grew by 36% on a year-on-year basis, clearly indicating that demand has not been a problem. It has been production and higher raw material prices that have largely been, the folly of the company. That
one
said,
thing, CJ,
yes.
But at the same time, aren't the numbers coming off a lower base last
That
September?
is true. But last September quarter, I think we had come out of the second wave in global, say major economies like US and Europe, especially because that was probably after that, the winter season that we had seen after the first wave of coronavirus back in April, May. So clearly there was some precedence for demand, and at that point of time I remember that the company had said that if the chip shortage was not there, they were seeing quite aggressive demand out there in the market. That said, if you look at JLR's margin performance on a year-on-year basis, margins actually expanded by 300 basis points. Now that is, I think, down to two facts, Santo. A, of course, they have tried to sell, and they have indicated this previously as well, that they are trying to sell more high margin products. They are trying to shift whatever the supply of chips that they have towards products which are high margin so that they can improve their profitability as much as possible. That is part one. The second part, of course, is the fact that they undertook a lot of cost saving exercises as well as far as JLR is concerned. So clearly, if you look at, compared to India versus JLR, the JLR performance this quarter actually was much ahead of expectation than the India business. So there are signs of improvement. I don't think it is all down and out. Of course, when you look at the entire consolidated numbers and when you look at that loss of about 1,000 crores as against expectations of about 250 crores on net profit, it seems like it is all down and out. But there is cause for optimism there. Also, the company has indicated that the supply issues with respect to semiconductors, that is definitely easing. They are getting into longer term contract with semiconductor producers, and that should hopefully help them increase production as well as improve sales as far as JLR is concerned in the second half of FY23. Now JLR, contributing almost 80 to 85% of the consolidated operating profit, clearly will be a very crucial mover of the stock, or the trigger for the stock. And yes, as far as the guidance is concerned, clearly there has been a little bit of disappointment, I think, but the management has been very clever in trying to be honest in the fact that the US market and the EU market plus China, of course, which remains entangled in the zero COVID policy, there is uncertainty right now, and it will be a little foolish to try to paint a too optimistic a picture out there.
And with that, let's move on to the market setup for this morning.
West Santo, it looks like a good setup, actually a bad setup. If you look at the SGX Nifty futures, they're indicating almost a 100-point cut on the Nifty this morning. So the sentiment indicator clearly would be a little bearish today. But if you look at the cues from global markets, they are also quite muted. The Wall Street yesterday saw a big slump, probably because of some of the rub-off effect of what is happening in the cryptocurrency markets at this point of time. They did have a rub-off effect on a technology stocks, with the Nasdaq index falling over 2% yesterday. Now we all know, if you don't know, well, let me tell you, in the crypto market yesterday we saw Bitcoin plunge to the lowest level since 2020, so almost a 2-year low on the Bitcoin. Ethereum dropped about 10%, more than 10%. That is largely down to the fact that one of the largest trading and cryptocurrency platforms in FTX is likely to go belly up, especially because Binance, it seems, which was earlier looking to bail the company out, Santo, and buy it for $1 from its earlier valuation 2 days ago of $32 billion. For $1, it was supposed to purchase FTX. That is likely to not happen. Binance, it seems, as at this point of time, pulled out of that deal, and that has bred a lot of fear in the cryptocurrency market as to what could be next, which other company could be next. And already there are speculations that Nexo could be the next crypto platform that could face bankruptcy. So clearly a lot is happening in the cryptocurrency market, and that is rubbing off into the global equity markets as well. If you look at the US dollar index, Santo, that has risen quite sharply, hinting at some bit of risk aversion in the market.
Well, but that said, near-term outlook still remains fairly positive, I would say, as far as the Indian equity market is concerned, because we've been outperforming for quite some time now, and I don't see any reason why this should dramatically change. Of course, the degree of outperformance could vary a little bit, but the money flows continue to remain strong. And at this point, even though we are seeing selling from domestic institutional investors, we're seeing good amount of inflows from foreign portfolio investors after a long time. So that should kind of, I would think, CJ, it should limit the downside in the market.
Possibly,
and
yes.
A quick check on the FNO market. We are seeing short build up in futures of Dr. Lal PathLab, Metropolis Healthcare, MRF and Jubilant Foodworks. At the same time, we are seeing build up of long positions in futures of PI Industries, Punjab National Bank, Bank of Baroda and Adani Ports.
Well, Santo, the newsmakers of the day and today on my radar would be, of course, the stock that everybody has been talking about the past few days, and that is Nykaa. FSN e-commerce, of course, is a parent that is listed on the bourses. Now, Nykaa will be in focus as the lock-in period for its pre-IPO investors, I beg your pardon, will expire today. There is also reportedly a block deal schedule on the stock for about 250 crore from an individual employee. So that is also likely to be a little bit of a pressure point for the stock today. That said, if you look at the other side of the coin, the bonus issue, the X date for the bonus issue will also be today. Now, Nykaa, remember, last month had come out with a bonus issue of 5 for 1. Basically, if you're holding one stock, you will get 5 more stocks of the company in your demat account. And tomorrow is the record date for that. Today, the stock will start trading X of bonus shares. So clearly, the move from Nykaa's perspective, if you look at it, is to spread out the selling pressure. This should limit some of the selling pressure that was supposed to come into the market post the end of the lock-in period for pre-IPO investors, who are, by the way, most of them are sitting on pretty hefty profits at this point of time. So they clearly have an incentive to take some profit, as anybody like any common investor would do, who, especially asset managers who have other investors to tend to. So that said, I think, Santo, this will be one stock that will clearly be dominating headlines today in the trading session.
Well, CJ, I don't know if that's been, many are calling it as quite a smart move in the market, but I'm not sure if that's really a smart move, because what we saw, if the fear was what we had seen in the case of Zomato, where a sudden wave of selling sent the stock price crashing down, but at the same time it also helped a swift recovery. Now, in this case, you are not going to change anything really by issuing the bonus shares. What it happens is that people who wanted to sell today, they will sell after, you know, whenever the bonus shares are credited in their account, and there is going to be more supply, or rather supply spread over time. If, let us say, for argument's sake, somebody who is still holding shares now and say that even if I share one share, I am kind of making a decent profit. So, I am not sure if it will really
Well, I think, Santo, only time will tell. That said, let's quickly take a check of the market, and clearly it has been a weak start for us. If you look at the Nifty and Sensex, down about 0.4% each, with the Nifty Bank among the sectoral indices leading the pain. The Nifty Bank Index down about 0.5% at this point of time.
Well, Axis Bank is under pressure because it's a block of the government sale shares which will be up for sale today. Nifty Bank also under pressure. Market breadth slightly negative at this point in time. Close to 850 stocks are down, and a little over 900 stocks are trading higher at this point in time. Nifty mid cap down by about 0.4%.
Yeah, and Santo, the VIX is actually higher, so clearly indicating that risk aversion point that I was talking about. The India VIX at this point of time higher by about 2%. So for the second consecutive day, we are seeing some sort of movement on the India VIX. Sectorally, Nifty Auto, Nifty IT, clearly I think after a decline in tech stocks on Nasdaq, Nifty IT index seeing a little bit of pain today, and Nifty Realty as well down about 0.5% at this point of time. So clearly it has not been a great start for the market, but let's see. Previously we have seen that dips are being bought, you know, in this market, Santo, and bulls will hope that we can see some sort of buying coming in at lower levels going ahead.
Well, that said, my newsmaker for the day is Balrampur Chini. Again, sugar has been one of the favorite sectors of CJ here, but the ethanol story doesn't really seem to be helping because the core earnings continue to be under pressure. So it was a miss across all the key metrics, be it revenue, operating profits, or net profits. Revenue showed a decline. The company reported a loss at the operating level, and net profits also were down. So this stock could be under pressure today.
Well, Santo, your hot brokerage bet?
Metropolis Healthcare by Credit Suisse. Credit Suisse has an underperformed rating on the stock, slightly raised its price target to about 1,250. Now, according to Credit Suisse, non-COVID business is down sharply on lower volume of government contracts, and Credit Suisse expects EBITDA margin to decline going forward, although it has slightly raised earnings EPS targets for the company by 2%, 5% and 5% for the next 3 years respectively.
Well, that is an interesting take from Credit Suisse on Metropolis Healthcare. That said, my hot brokerage bet of the day would be Sharda Cropchem from the agrochemical space. Now, Julius Baer came out with a report on the stock with a buy rating and a target price of about 500 rupees. Now, interestingly, of course, while the the brokerage firm has retained its buy rating on the stock, it has slashed its price target for the stock by about 18% after the Q2 earnings. Sharda Cropchem, of course, cut or marginally trimmed its guidance on both the revenue front as well as the margin front, and that has been the major driver for the cut in earnings estimate that Julius Baer has also had to undertake, and therefore the cut in price target, as I said earlier. That said, overall, if you look at the point of view that the investment thesis that Julius Baer has, they have said that Sharda Cropchem is likely to see steady growth going ahead, given the fact that they have a very strong presence both in the EU market as well as the North American market. So because of that, and given the strong market share it enjoys there, the overall earnings performance, besides the current weakness that we are seeing, is likely to remain quite strong. That said, the key monitorable, according to Julius Baer, would be the movement in the foreign exchange market. Let's not forget, a major reason for the weak earnings in the second quarter is the fact that the rupee, European euro, of course, had depreciated quite considerably against the rupee. So because of that, there was a lot of weakness in earnings for Sharda Cropchem. So it will be very interesting to see how the stock behaves. The stock has fallen quite considerably from the record highs it had enjoyed last year. So I don't know if some long-term investors might take a look at it, Santo, later on.
Well, and with that we move on to the stocks on our watch list this morning, beginning with Lupin. Interesting set of second quarter numbers there. Sales and operating profits were slightly above what most analysts were expecting. The key highlights were the recovery in its US sale. It had fallen to as low as $120 million, but it's recovered to about $159 million in the quarter gone by. Growth in its India business also continues to remain strong now. the company has been undertaking a series of cost control measures. It's been rationalizing its product portfolio, and all that slowly seems to be yielding results if you look at the improvement in operating margins. Besides that, the company has also retained its guidance, its 18% EBITDA margin guidance for FY23.
Well, Santo, clearly there has been, improvement at a fundamental level in the second quarter earnings from Lupin. But that said, a lot of the margin expansion, that the market has been so excited about as far as Lupin is concerned, has been driven by, as you said, cost-saving exercises. And that is something that is unlikely to sustain going ahead unless the main business, that is the US business, starts to do or at least register healthy growth going ahead. It will be very important to see how the product portfolio in the US develops for or evolves for Lupin. The management has indicated that they are planning to launch a slew of products there. They've recently also got approval for a lot of products because of the easing, regulatory risk that some of their plants were facing. But I will still remain a little skeptical because in the past, Lupin has had a bad habit of missing, its guidance year after year, at least if you look at the past 4 years of 4 years trajectory. So I'll be a little cautious to, take, I'll take the guidance on the EBITDA margin with a little bit of pinch of salt at this point of time. I'll rather, be proven wrong later and then get into the stock than probably try to, second guess the management at this point of time. Well, the stock on my radar today would be Piramal Enterprises, a harrowing sort of earnings performance from the company, and the stock will likely suffer because of that today. If you look at the earnings, surprise loss of about 1,536 crores for the company as compared to a stellar profit that the company had posted in the year ago quarter. Now, the losses were largely driven by the fact that their loan loss provisions jumped almost 1,500 crores, 1,500 crore rupees in the second quarter, indicating that there remains a lot of pressure in the wholesale book of the company. That said, CLSA has said that while the worst may be over, at this point of time, investors might find it a little difficult. So clearly, CLS is dropping some truth bombs on Piramal Enterprises, Santo, at this point of time. And I think this is a stock that is not going to be taken very lightly by the market at this point of time.
Well, no doubting the disappointment of the market over the latest quarterly numbers. The stock is almost down about 7% in early trade at this point in time. Yes, numbers have disappointed, but CJ, overall the analyst view by and large has been fairly bearish to cautious on Piramal Enterprises. So it was not as if analysts were having very high expectations. You saw the stock fall to about 800 levels and then bounce from there. So to that extent, given that it is not a crowded trade, to use one of your favorite terms, probably the downside may be limited. Things probably could only start getting better from here on. Let's also not forget that the company just bought out DHFL and it's trying to integrate DHFL's books with it. The longer term targets of the company is 40% from retail portion and 60% from the wholesale market. That is the mix that the company is targeting.
Yeah, and I think of course there will be challenges with respect to the assimilation of the DHFL book. I mean, we don't yet know how many skeletons there are in the DHFL book. Maybe the sort of loan loss provisions we are seeing are probably related to that book itself than to the standalone entity that is Piramal Enterprises that we knew before the acquisition took place.
Well, and Pidilite Industries, next stock on our watch list. Disappointing set of numbers there, second quarter. Margins and revenues were below what most analysts were expecting. Also, CJ, margins have been the lowest in many years now, not just quarter, in several years, and this is the second consecutive quarter of dip in margins that we have been seeing. Now, top line has been flattish for almost the last 5 quarters. Goldman Sachs and Macquarie are among the brokerages which have a bearish view. Again, the issue here is, CJ, I would say expensive valuations. If the margin remains under pressure, clearly that means that investors will start questioning whether they should be paying such a high multiple for the stock.
Clearly, Santo, I think if you look at the performance for the second quarter running, the performance has been very disappointing. But I think the commentary that the management has given, post the earnings, that may limit some bit of, or may at least cap the downside in the stock going ahead, because they have indicated that sequentially they're expecting demand to recover. Of course, with the construction season coming back, probably also the benefit that they might get from lower raw material prices on a sequential basis, that might help probably improve profitability as well as volume growth going ahead. I think Pidilite, of course, being in an industry that they have probably been hit very hard by the surge in crude oil prices that we have seen on a year-on-year basis, and of course other crude derivatives and other raw material prices for Pidilite. So clearly, if you look at the stock at this point of time, they're high. It's almost at the flat line. So market, it seems, maybe is looking past the Q2 weakness and maybe focusing more on the management commentary that seemed to be a little optimistic, on the optimistic side. And I think therefore the stock may not go away so soon.
Well, and last stock on our watch list is Deepak Nitrite. Again, margins at multi-quarter low, although while there is a sequential decline in top line, you are seeing that on a year-on-year basis, the growth has been pretty robust. But that said, again, the worry point here is margins. In its first quarter presentation to analysts, the company had said that there will be improvement. The margin pressures could ease from the second quarter itself, but we are not seeing that yet. So there is no saying how long the margin pressures could persist, CJ.
Yeah, but I think, Santo, I would want to look beyond the second quarter for Deepak Nitrite, because Deepak Nitrite is a long-term story in my point of view. Clearly, one of the stronger bets on the entire China plus one theme that we've been so talked about ever since the pandemic started. Now, also, if you look at what Deepak Nitrite is trying to do in terms of its product portfolio as well, its latest capex that is going to go, do about 1,500 crores over the next few years, that is largely focused on advanced chemistries, and because of these are specialized products, the margin profile also would be much richer compared to what Deepak Nitrite is used to, and therefore I would not be surprised that going ahead you could see overall in general in an improvement in margins for the company. Apart from that, as far as the short term is concerned, I think clearly you will see the impact of declining input prices, crude oil prices in the third quarter and fourth quarter for sure. I think I think the second quarter they were still probably holding on to a lot of high cost inventory as far as raw material is concerned, and maybe that's why we have not seen the impact on the or the benefit in the margins. But I would hope that Q3 and Q4 should at least show some sort of sequential improvement as far as margins are concerned for Deepak Nitrite.
And before we wrap up, a quick take on the Nykaa stock, which is adjusted for its 5
bonus
shares
issue,
for 1 share bonus issue. So clearly, CJ, the tactic for issuing the bonus share seems to have paid off, because the stock has exactly adjusted to the bonus issue.
Absolutely.
So it's down by about 82%, which is what would happen, if you were to take the additional shares into consideration. Now, if there was further selling pressure, you would have seen the stock go down much more. That has clearly not happened. So I would say that, CJ, the can has been kicked down the road.
Yeah, exactly. The quote that I was supposed to use, Santo, you have stolen it from my mouth. But I think overall, let's see. I think this is going to be a story that may not end just today or tomorrow or day after tomorrow, because I think this selling pressure, if there were to be any, I think would be spread out over the coming months and weeks, and therefore I think that should provide a little bit of comfort as far as price damage is concerned to a lot of investors. I think optically at least, this will probably make the entire price damage look much more palatable to investors who are currently still holding on to the stock from the the IPO levels than say maybe it would have if the bonus issue was not there, and you would have seen the stock maybe crash or hit circuit limits almost every second day. So I think it is a good move. It seems to be a very canny sort of a move, and of course, being a former investment banker, you would expect such sort of wizardry from the management. But that said, I think we can wrap up the show today, Santo.
Well, and thanks for watching the show, and please do send your feedback if any. We'd love to hear them.
And as usual, guys, you can keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, there is only one place to be, moneycontrol.com. And you can also download our app, Moneycontrol, from the Google App Store as well as the Apple App Store as well. So we'll catch you again live at 3 p.m. Till then, have a great trading day.